Miners were really struggling with capital, obviously, over the past year since January, which has caused quite a few issues within the industry as far as plants shutting down, unsteady hash rates. That all does continue to a certain extent, but there is a little light at the end of the tunnel. And so we're starting to see more facilities come online and that sort of thing. This one's in Paraguay, pretty surprisingly. And the Commons Foundation signs a 100 megawatt deal for crypto mining in Paraguay. The South American country with abundant hydropower wants to attract Bitcoin miners. The Commons Foundation has signed a 100 megawatt 10-year power purchasing agreement with Paraguay's grid operator, buying energy that it plans to use for crypto mining. The South American country's grid runs almost entirely on hydroelectric power, so nice and clean for all the naysayers there. With a price of around 5 cents per kilowatt hour, thanks to dams built on some of the world's biggest rivers. Most of the electricity from the Itaipu, something like that, dam, I need to learn to pronounce that. The world's largest in terms of average annual energy production, should definitely learn how to pronounce that name since it's the world's largest in annual energy production, is exported to Brazil under a treaty that is set to expire in 2023. The Paraguay government is looking to attract Bitcoin miners to soak up excess energy, as they should, reduce waste. And that is obviously one of the benefits of attracting Bitcoin miners. Last week, the country's Senate passed a bill to regulate the industry. The bill requires miners to be licensed by authorities. The 100 megawatts secured by the Commons Foundation will create 1,000 jobs over the next 4 years in Villa Hayes at District Jose Falcon in central Paraguay, according to a press release sent to CoinDesk. The contract between the Paraguay Electrical Authority and the Commons Foundation set the price for electricity at $30.78 per megawatt hour. Nice. However, the price can be adjusted annually, as well as depending on regulations under the terms of the deal. Miners usually prefer fixed price agreements, locking in prices in advance so that they are not affected by the price fluctuations. Our contract today is a historic day for Paraguay. I am confident this business will succeed and attract more investors, said ANDE chairman Felix Sosa in a press release. The contract was signed on July 15th, but announced on Thursday. The Commons Foundation is a Singapore-based organization that invests in crypto and blockchain projects. Canadian firm Bitfarms operates a 10 megawatt mining site in south central Paraguay. We've talked about, Paraguay quite a few other times, I think earlier this week too. They have some interesting regulations coming into play surrounding cryptocurrency. But obviously, case in point, just once again, when you get into the environmental argument with people over Bitcoin and Bitcoin mining and proof of work in general, it's important to point out two things. One is that the incentives are aligned to influence miners to utilize renewable energy. And in fact, the Bitcoin mining industry is probably one of the number one industries to be pushing for renewable energies. Number two, to that, is Bitcoin mining allows energy companies or governments that are basically regulating energy companies to reduce waste. And that means that you are more efficient. And basically, any success of any economy is usually determined by the amount of energy they are able to utilize. And so reducing waste is obviously beneficial to the economy. And that's pretty much all you really need to do when you get into those discussions with people. Now, Bitcoin mining difficulty is basically seeing a huge drop, which is good news for people that are mining Bitcoin. And that is primarily due to the Texas heat. And I can attest to this because I am down quite a bit as far as hash rate too from the Texas heat. It's the third consecutive downward adjustment, the first such occurrence in a year. The difficulty of mining a Bitcoin block dropped by 5% on Thursday as miners turned off their machines to lower power demands on energy grids dealing with a U.S. heat wave, particularly in Texas. The Bitcoin mining difficulty adjusts automatically every 2 weeks to keep the time needed to mine a new block roughly at 10 minutes. As more computing power gets plugged into the network, the difficulty adjusts higher. And as computing power gets pulled from the network, As has been happening recently, the difficulty adjusts lower. The difficulty on Thursday fell 5% to roughly the same level it was back in March, data from miningpoolbtc.com shows. Now, I would like to point out that we've been tracking this, and it's pretty interesting that we see these dips of like 20 exahash just really quickly almost every day. And it appears to be, from what I can tell, peak heat times and peak power consumption times in Texas are pretty much aligned with it, which is really interesting. So I think miners are shutting down during peak heat times and then coming back online, specifically Bitcoin miners and large farms. The difficulty was reduced as American miners turned off their machines for significant periods over the past 2 weeks as electricity prices soared due to a heat wave, said Jason Mellerud, senior researcher at Arcane Research. It's the third consecutive decrease in mining difficulty, the first time this has happened since 4 straight declines 1 year ago as Chinese miners packed up their rigs thanks to the country's ban on Bitcoin mining. The initial drop in the hash rate at the middle of June was likely caused by the plummeting Bitcoin price, Mellerud continued. But the second drop at the beginning of July was likely caused by miners powering down in response to high electricity prices. Now, you guys know I got hit with a crazy additional fee on mine, even though we do have that contractual price of, basically with delivery at 6.5 cents a kilowatt hour. I had a whole different line item there, and I'm still working through what exactly that is. I am understanding from some of y'all in the Dallas area, there's not as much. Houston area, no. Seems to be in my area in particular, which is going to be, between, I guess, Austin for the main one and then like San Antonio. I've heard reports in San Antonio is getting the same fees as well as Austin, Texas. If you guys are not seeing those, let me know. But I'm trying to figure out exactly what's happening there. Hopefully I'll get to the bottom of it. I am looking at probably shutting down at least like some of the rigs that are just overheating. At this point, I have been reducing power as well. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.